The macro for me has been, are things turning? Is inflation coming off? And is therefore the rate of change of rate increases going to reduce or not? So my view is that we've seen the peak in CPI. The market's starting to realize that they've been overestimating CPI, and therefore inflation is going to start coming off. We saw that with PPI today as well. And I think we'll start to see unemployment pick up, whether it's this month or next month.
We are facing yet another week of a very turbulent cryptocurrency market triggered by the collapse of cryptocurrency exchange FTX and sister company Alameda Research. While the industry is still buzzing with news of the collapse, macro guru and renowned investment strategist Raoul recently called attention to the macro situation and what it could mean for the cryptocurrency markets in 2023 and beyond. During a recent question and answer session on YouTube, the former Goldman Sachs executive discusses the U.S. Federal Reserve's interest rate hikes, inflation, global liquidity, and how the crypto market fits into the macro environment despite the ongoing collapse triggered by the FTX collapse. You'll recall that news of the FTX collapse broke the same week the U.S. inflation figures for October came in much lower than predicted. Unlike the crypto market, the equities market has benefited significantly from the improving macro environment. After staying below $4,000 for 2 months, the S&P 500 hit $4,022 on November 15, its highest price since mid-September. It's a no-brainer that without the FTX news, the cryptocurrency market would also have recorded such significant gains. But the collapse will not continue to cloud the crypto space forever. It will gradually die off as everyone moves to the next big news. It might not be fair to investors who have lost their hard-earned resources, but that is how humans are wired. During his question and answer session, Powell discusses the next phase for the crypto markets. If you want to know what lies ahead beyond the FTX collapse, please watch the video to the end, hit the like button, and subscribe to the channel. Also, ensure you drop your comments and observations in the comments and turn on post notifications for more videos like this. Thanks and enjoy the video.
Those are the signals the Fed is looking for to slow down. So when they slow down, it's the rate of change of interest rates that matter, whether they do another 50 and another 25 or another 50. Either way, we're getting towards the end of the rate cycle where they will pause. The pause is enough for the market to perceive it as the lack of pressure holding this balloon underwater. And when you take it off, the balloon can rise. And we've already seen the equity market take that well. I don't believe that means if the equity market's going up, inflation's coming back all over again, we're in a big mess. I just think the Fed just stay on pause and wait for inflation to fall below the Fed funds rate. My guess is inflation will be below 4% sometime around February, March of next year. And in which case, if it continues to fall, which is my base case, in fact, I think inflation goes negative, then we will see the Fed eventually pivoting and going to rate cuts instead to stimulate. But that game is to be played for. Right now, it's a matter of the end of the macro story and liquidity coming. The global liquidity cycle is currently led by China. Chinese liquidity has turned up, and I put a tweet around this amongst all of my macro crypto views. Chinese liquidity leads, global M2 should follow, and as we start getting through the liquidity cycle, liquidity is one of the key drivers of crypto. Crypto is driven by two things: the technology, which is Metcalfe's law, the adoption of that technology and its uses, which is Metcalfe's law, to remind you, is the number of connections on the network and the number of people on the network and the number of connections. So how much network activity is there amongst how many people? So that is Metcalfe's law. That's the technological driver that drives the exponential growth. In the middle, you have cycles. The cycles are driven by liquidity, same as all assets. And liquidity being drawn out as M2 shrinks, the Fed raise rates, other central bank raise rates, means that crypto falls. As liquidity flattens out and starts turning up, then crypto rises, as do other risk assets. So that's the basic cycle. Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend, and that becomes an extremely interesting time to focus on accumulating crypto. What also happens at the bottom of liquidity cycles is things blow up. Less money around means those worst borrowers and people who have abused capital tend to blow up. And we saw that starting in June in the crypto markets as the centralized finance part, the CeFi part of crypto blew up as credit became less available, and you start seeing who's swimming naked when the tide goes out. And there was a whole bunch of people swimming naked. What we didn't realize is there was a naked whale, and the naked whale was FTX and Alameda. And that was something where it appears from what we know that Alameda went bust in June. And out of that, they tried to paper over the cracks with customer money to hide the issues, because it would have brought down the exchange anyway because of the tie-ups with the FTT token. And then this whole thing gets exposed by CZ, but really the market needed to know this stuff. So that's where we are now. And I know we're going to have a lot of questions about knock-on effects of that. So I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle and right on that secular uptrend of whether it's the 2 standard deviations oversold in the log regression channel of Bitcoin or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see.
Raoul Pal sees a complete reversal in the macro situation in 2023. Instead of inflation remaining significantly high like others are predicting, Pal believes it will continue to drop until it goes negative. Of course, this will trigger interest rate cuts, which will, in turn, positively impact asset prices. Do you agree that we would see such significant improvements in the macro environment in a few months? Please let us know what you think in the comments section below. Pal also discusses his assessment of the FTX collapse and the possibility of another widespread crypto contagion. Though we can't rule out the possibility of more bankruptcies and collapses connected to FTX and Alameda, Pal believes the worst might already be behind us. Here is Raoul Pal's assessment of the FTX collapse and potential bigger contagion.
I have a slightly variant view, but you can't have much confidence. I think most of the bad leverage was taken out in June, and this was the final part that should have happened in June but didn't. What are the knock-on effects? Well, normally if Alameda had gone bust, the knock-on effects would have been Celsius and BlockFi, etc. They already went bust. So we've got the knock-on effects of FTX having bought them and then can't fund them. But I think that was a kind of known failure. So is there somebody bigger here that is yet to get knocked on? Some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. Signature, Silvergate, those two are the main lenders in the system. What I do know is there's a lot of hedge funds trapped in FTX, because FTX was really the avenue for the ability to short markets via the perpetuals. So a lot of hedge funds use them, and they've got that assets trapped, which is a shitty situation for everybody involved. And I don't know how that resolves. I got caught out in MF Global myself. It was very similar. It took a while before we got our money back, but we got a big first tranche back. And then eventually over time, as the administrators and liquidators sorted it out, we got the rest back, but that took years. That's one of the reasons I think the markets have been less aggressively pricing the downside. It's difficult to short the markets. A lot of the hedge funds won't use Binance, for example, because they can't get it through compliance. And a lot of the other products aren't available on the other exchanges. So it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop. I don't know really who they are or what they are. People have been looking at Genesis, Jump, and the other market making firms. Is it possible? Well, they've all said no, but as we know, that means nothing in this world, because everybody says, no, we're all fine. We're just going to have to wait and see. But I am biased towards, if there is another sell-off, you want to start aggressively adding into it. Because the macro cycle is turning, and I think this is the final phase, the capitulation phase. And it's either mainly priced in, or nobody can short the market. Who else is left to sell? Most of the people are kind of diamond handers right now. Most people got flushed out in June. So I'm actually not that bearish, but I'm open to the possibility there's more downside. I'm pretty sanguine because my time horizon is much longer term. So I expect machinations like this. I expect 80% drawdowns. I've had them in the past several times. I'm kind of used to it. And remember, once you put it on a log scale, those drawdowns never go to the previous low because we've got an exponential uptrend over time. So, it's really a long-term game. I'm not a short-term trader, so I can't really help with the short-term side of it. I think it's dangerous in an 80 vol market unless you really know what you're doing to be a short-term trader. But be a long-term trader, these kind of points are really interesting.
What do you think about Raoul Pal's macro outlook? Do you think crypto prices could see any improvements before the year ends? Let us know what you think in the comments section below. Also, be sure you hit the like button and subscribe to the channel. We are still trying to hit 200,000 subscribers within the next few weeks, and we appreciate all the help we can get to hit the goal. If you would like more videos like this, then ensure you check out our other crypto-related videos and turn on post notifications. Thanks for watching.